There is this holding company with 29 businesses in their portfolio, which earns 21% margins, has 14.5% returns on capital, and carries almost no debt. Yet it keeps acquiring niche traditional companies almost every single quarter. And many of you haven't heard of this holding company, but it's called Röko. And behind this is a very small team of world-class investors, capital allocators, with the main gentleman, if we can say, Fredrik Karlsson, who was the former Lifco CEO, who mastered the art of permanent capital. And after 2 decades running one of the Swedish largest serial acquirers, Fredrik walked away to build his own. And after 6-7 years of building, Röko is today worth billions. They own 29 companies and they operate with just 8 people at their headquarters. So this is how a 60-year-old founder turned experience into one of the Europe's most efficient compounding engines. And before leaving Lifco, Fredrik Karlsson had a compensation package. I share this because a lot of people oftentimes ask, how did those people got started? And when he was working for Lifco, I was doing the research. The compensation package was running at around $5.5 to $6 million US in his final year. And Röko was launched in 2018 with the founders putting in roughly 20-25 million US dollars of their own capital. And they raised another 250 million from 130 Swedish high net worth individuals, giving them a very strong capital base from day one. So the holding company itself was founded 2018, and already in 2023, they generated 100 million US dollars in EBITDA and a bit more than $500 million US dollars in revenue. And their portfolio today, it's a split across B2B, which has 19 units, and B2C with 10 units. They only buy asset-light companies. To give you an idea of some of the portfolio companies, there is a Denmark-based designer and manufacturer of uniforms for students in the Nordics. There is a Danish furniture designer offering affordable luxury globally. There is a UK distributor of bearings and spare parts. There is a golf equipment retailer. There is a men's wear brand. There is an IT hardware refurbishment business in Scotland. And there is a Swedish leading independent craft brewery. So you can see a very diversified portfolio, both B2B and B2C. And all this is under one roof. And looking at the recent quarter 3 2025 numbers and year to date, their net sales is 454 million, which is up 6% from last year, and adjusted EBITDA is 93.6 million, which is a margin of 21%. And so far in 2025, they've done 2 acquisitions. One is Toppa, which is a Benelux bathroom products, and another one is Oppold, which is a German wood processing tools company. And they did it with financing with cash and modest bank debt. And if consolidated from January 1st, they added around 11.8 million in sales and 3.5 million in adjusted EBITDA year to date. And again, they do all this. They run this huge portfolio with just 8 people at their headquarters. And the interesting fact is, before IPO, the 4 founders, they still owned 70% of the company. And as of November 2025, the major shareholder breakdown is Fredrik Karlsson, the CEO and co-founder. He owns roughly 10.5% of the capital in the business. Other founders, co-founders such as Thomas Billing own 9.5% of the capital. And if you take institutional and individual insiders, they hold together 46% of the company, including those major individual founders. So again, their voting power is still very strong, but their economic ownership is a little lower after doing an IPO. Now, when it comes to the founder and CEO, the co-founder and the CEO, Fredrik Karlsson, before starting Röko, Fredrik spent 20 years as CEO of Lifco, one of the Swedish best-known serial acquirers, and Now, at the age of 60, he's simply applying everything he learned there, but with even more long-term mindset. And when asked from Fredrik how he scaled Röko so fast, he said, if you have 30 years of experience doing something, it's easier because you know exactly what to do. And he built Röko around one simple idea. If you get a good team, the rest will follow. Again, with a good team, with the initial capital, just in 4 years, they reached 100 million in EBIT. No other serial acquirer in Europe has ever scaled that quickly. And the biggest lesson Karlsson have said on one of his interviews is, if your business has a high margin, you're doing something right. Your customers are telling you you are worth it. And again, that's why Röko only buys companies with EBITDA margin above 15%. Their average margin today is roughly 18 to 19%, if I'm correct. And he also learned not to be too sector focused, because if you only buy in one sector, you eventually run out of great deals or end up buying bad ones. And again, that's why Röko is sector agnostic. They'll buy any company with strong profits, stable management, and a moat. It gives them a bigger runway, better quality options, and less pressure to overpay. And it works, because Röko's most recent quarter, Q3 2025, they delivered 2% organic growth and 3% year to date, and EBITDA margin of 18%, and return on capital employed is 14.5%, and net debt of just 2.1 times EBITDA. They're basically almost debt-free operationally, with interest-bearing net debt at only 0.3 times EBITDA. They also, as I said, completed 2 acquisitions. So this is how Fredrik Karlsson runs Röko, which is like low debt, high returns, and patient compounding. And when asked about the risks, like everything is growing smoothly, they did an IPO, what's the answer from Fredrik is he fears most a recession. That's the only real one. In 2008, our profits dropped 30% at Lifco. That's the risk in any diversified group. And the management risk. A bad manager can destroy culture faster than anything. But Röko's structure minimizes that. They typically buy 60 to 70% of each company, keeping founders invested and aligned. We want fanatical people who love their job, he says. They stay on if they love their job. His approach to capital allocation is deeply Buffett-inspired. He reads Buffett and Phil Fisher and built Röko checklist around them. Continuous profit growth, high margins, low capex, good managers, and low customer concentration. He said it himself. At least 70% of what I do comes from Buffett or Fisher. I simply read the book. And when it comes to Röko's headquarters, the only thing portfolio companies must do is fill out the monthly Excel sheet and send excess cash to headquarters, where Karlsson divides what dividend each company can pay. And that's it. No micromanagement, no bureaucracy. And he jokes that he could make a decision on an acquisition in a day. And that's probably the result of doing something for 30 years. And he even said that I can do 10 a day if needed. He just loves the game so much. And he said he's going to do it until he dies. I will be like Buffett, he says. Otherwise, I'd be bored. And he's right. Everything he's built, Lifco, Röko, and even his private investments, he has outperformed the stock market. Except one time, which was a government-regulated elderly housing business. He keeps it, and he says, as a reminder, never to invest in government-influenced industries again. Röko today is one of the purest examples of European long-term compounding in traditional industries. And what they've proved, again, in Q3 in 2025, they've quietly proved that what makes great capital allocators different is when the cycle tightens, they don't pause, they refine. Because revenue is up 6%, margins rising to 21%, nearly no debt, and cash still flowing. Even after IPO costs, earnings per share rose. And they do it all, again, sector agnostic, founder aligned, lean headquarters, real cash flow, and the founder who believes that secure cash flow beats high growth. And their model is, again, very simple. I keep repeating this. Earn high margins, keep leverage low, buy niche leaders, and let time do the work. And that's what makes Röko and Fredrik Karlsson and their whole team so fascinating to study for anyone really with a desire to allocate capital, because it's a $2.24 billion worth compounding machine built from small group of 8 people and decades of experience. And as a side note, if you're interested in deal-by-deal private equity investing, check out CapitalBad. They're the sponsor for this podcast. It's a platform where accredited investors access curated opportunities in lower middle market acquisitions. Investors have already participated in 8 successful deals, with new opportunities listed only when they meet CapitalBad's high quality standards. So again, they are the sponsors. Go to capitalbad.com, registered. If you're accredited investors, start looking at the deals. The minimum ticket is $25,000. And in that way, you can build this small holding company yourself. Lastly, I hope you enjoyed this episode. And if you want to learn more about Röko, I put 2 other episode links here as well. I've done a lot of research on them, so I hope you enjoy these as well. Thanks for listening. This is Old Computers. My name is Mick, and see you in the next one.